US blue chip stocks were weaker overnight from jitters over the Fed meeting and pressure from a sell-off of Microsoft Corporation shares. ABN's Ian Hunter has more on the closing numbers from Wall Street. As ABN's Ian Hunter reporting from our New York studio. Joining me in our Hong Kong studio to give us his outlook for the market, there is Philip Chan, Research Director at Shanghai Hong Kong International Securities in the territory. First of all, Philip, thanks very much for joining us. Obviously, that no rise in the US interest rates was widely predicted. It's not likely to have much impact on the market today, is it?
Not in Hong Kong, no, because, as you say, it was widely predicted. I think most analysts and commentators didn't expect the Federal Reserve to dampen market sentiment at this stage, so close to Christmas.
Right. Yeah.
So I don't expect it's going to have much effect here. However, it will sort of strengthen the idea that they're going to raise rates early next year. Sorry, probably at some point early next year anyway.
On the market yesterday, there was a lot of activity in banking shares. What was that all about?
Yeah, they were getting excited about the disclosure by the Bank of East Asia that they're going to reveal their inner reserves at some point. And although analysts have got some sort of idea maybe what those reserves may be, the speculation in the market put some emphasis on the banking shares, and so that's why they were quite active yesterday.
In recent days, we've seen a certain amount of weakness in property shares and in the property market. Is that likely to be a factor on the market over the next few weeks, do you think?
I think the property market is still at a difficult stage because the interest rate cycle, the scenario is not quite clear. I mean, we're not sure whether we've reached the peak yet, and the selected property developments that are being offered to buyers and users are still being taken up, depending on whether the financing is there and etc. I expect that that will continue to be the case early next year. So I don't expect that the property stocks to significantly weaken over the short term.
Yes, looking ahead to the early part of next year, what do you think are going to be the main factors affecting the market? What I'm thinking of is that if the Federal Reserve is being successful in slowing down the American economy, that isn't actually good news for the Hong Kong market, since it depends so heavily on foreign trade. Although the forecasts are for actually continued strong growth in international trade for Hong Kong. Which do you think is going to be the most important? It is a booming economy, but if America slows down, that can't be good news.
No, I don't think that the Fed wants to slow down the U.S. economy to the extent where it's almost grinding to a halt. They just want to slow it down to a more sustainable level, and that will still mean very good trade with this area, Southeast Asia, and for Hong Kong in particular. I think it's really just whether they can convince investors that that they've slowed down the economy to a sustainable growth rate, and two, that interest rates are stabilized, say in the first quarter of next year. Once that happens, people will come back to the market because they know then that rates have stabilized, and hence they know their risk.
Philip, thanks very much for joining us this morning. That was Philip Chan, Research Director at Shanghai Hong Kong International Securities in Hong Kong. It was a day of gains.